Hello everybody, welcome to Ask Me Anything by the Joyful Investors. So the topic we are going to discuss today is, let's say if I have less than 10k, how should I invest my money? Alright, first, we must always understand that before we invest, we must have first already set aside 6 to 9 months of savings for emergency needs. If there are also any short-term obligations such as debt installments to pay off, they should be set aside as well and should not be invested. So with this out of the way, we assume that the 10k or so you mentioned is in addition to the above needs. Firstly, we must understand your investment objective. Would it be something like for funding your children's university education or for your own retirement? Of which we should ideally be looking at something that is more than 5 to 10 years out. I get worried when I hear retail investors plotting in their money for the purpose of growing their renovation funds, wedding funds which they need in just a couple of months or less than 2 to 3 years. The higher your financial literacy, the lower the investment time horizon you can afford to have and still stand a good chance of doing well. But for most of us who may just be getting started, especially since you're watching this video, it's better to err on the side of caution and have a much longer investment time horizon, which would enable you to ride out any unforeseen market events in between. That will mean a minimum of 5 years and beyond if we take a look at the annualized returns for the S&P 500 index. Despite being in a nice uptrend over the long term, there will still be some years where the S&P 500 has a negative return. But by being invested for at least 5 years, it will dramatically increase your probabilities of win rate in this case. On the other hand, if you are invested in another country's ETF, where the underlying stocks are more cyclical, like banking or property stocks, such as the ES3 ETF, which mirrors the STI, after 10 years out, you could still well be flat. And yes, if today all you have is 10k and just getting started, an ETF like SPY does you good because you do not have to do that much of a research by picking your own stocks. The portfolio would definitely be much less volatile as compared to you picking 3 to 4 stocks with a 10k budget. If you are a more experienced investor and believe that you are good with stock picking, then maybe you do not have to just invest in an ETF. But the question here is, if I have less than 10k, if you have been investing for some time and you still just have only 10k or less, maybe it's time to relook your process of stock picking or how you can be making higher probability entry points. When you eventually manage to save more or grow your existing portfolio, say close to 20k, maybe then it will be more purposeful to start stock picking, where you perhaps can have say 5 positions of about 4k each. One way you can do so is to buy fractional shares with interactive brokers. But till you do that, take the time from when you start investing in the ETF to learn how to do stock picking correctly, which you eventually would thank yourself for. Are you new to investing or have you been grappling with some unanswered questions in your investing journey? Send your burning questions to us at AskMeAnything with TJI.